Most important thing is, how do I reconcile this idea that there is a housing shortage with the idea that the media keeps saying that there has been a decrease in home sales?
Yeah, that's a good point, right? The media has been talking about this crash that they expected for a long, long time. And the first thing that they talked about as why they felt that there was going to be a crash was the percentage of home sales decrease, the number of home sales that we have this year versus last year. But home sales decreasing does not mean that home prices have decreased, which is a very big thing, right? When we're talking about a crash in the stock market, we're not talking about the number of trades that happen and how the number of trades go down. We're talking about if prices would crash. Well, in real estate, for some reason over the last 6 months or a year, right, the media has talked a lot about how the number of home sales have gone down. But home prices in many markets, Jacksonville being one of them, have not gone down. There are some markets across the country where home prices have gone down, but it's not across the board. In Jacksonville, home prices have actually gone up. So we have to separate home sales from home prices and understand that if there was a crash, you know what the crash was? It was a supply crash. And it happened many, many years ago, and it continues to get worse.
So then reduced overall number of sales doesn't necessarily correlate with prices going down. It just correlates with reduced activity happening in the market. But behind the scenes, there is a imbalance between the amount of people that want to buy a home and the amount of homes available.
Yes. So let's all understand now that home prices are normalizing, which is exactly what we came out and said 6 months ago when we were the oddballs. And we said that the home pricing is normalizing. It is not going down in a place like Jacksonville. So you ask, why is that happening? Well, the number one reason was inventory. We looked and we had a lot less inventory available to meet the demand, even as the demand was coming down because of high interest rates. We still didn't have enough inventory. So that's the number one reason. But the next reason goes to the breakdown of the type of sales that are happening. And there is one segment of sales that is much more price resilient than another segment of sales. Okay. So I'm going to hit you with some data here. Overall home sales have gone down, but existing home sales have gone down a lot. New construction home sales have actually increased year over year. I said that again, new construction home sales have actually gone up from last year. Most people do not understand this. So this is from, again, Freddie Mac. In April, existing home sales were down 3.4% from the year before. New construction home sales were up 4.1% from the year before. And this is from this year. This is from June 2023 now I'm talking about. For the year, January to April, existing home sales are down 14%, but new construction home sales are actually up 2%. So what's happening now is the composition of the marketplace is changing. New construction, while it is not enough to satisfy the big shortage that we have, new construction is happening and it is filling the gap because there's just not enough existing homes on the marketplace.
Why wouldn't there be, if prices are going up because there's a lack of supply, why wouldn't people be selling their home and cashing out in a way to be like, it sounds like a seller's market? Right?
Yeah, this is a big thing. You've heard of like golden handcuffs, right? You've got golden handcuffs. You've got a job that you just can't leave, even though maybe you want to. We've got something like that happening for all of us out there who have mortgages that we obtained in the last 2-3 years. According to Goldman Sachs, 99% of mortgages right now are under 6% interest rates.
99%.
Yeah, 99% are under 6%. And there's a large percentage of those interest rates that are under 3% and under 4%. I think it was 72% or under 4% or something like that of those mortgages. If you are sitting in a home and you've got a 4% mortgage, and oh, by the way, you probably bought that house recently because there are a lot of home sales that happened over the last few years. It is not going to be easy for you to leave that mortgage and that home and go and buy something else, because for you to go and make that decision to go and buy something else, your payment, even though your payment largely is going to go up. significantly, and you're going to get a lot less house for it.
Yeah.
And so people are just flat out not doing that. And it's the rate lock effect. People are locked into such low rates. And that's why we have a lot less listings that are coming on the market right now. We have on listings is the same thing as inventory. So you already had a shortage in housing that was developed because of the underbuilding from the Great Recession. You had this from 2018 to 2020, even before the pandemic, where we still were increasing our deficit. Now you've got the rate lock effect. And this is the biggest reason why supply is not going up. This is the biggest reason why your floor for pricing continues to remain high. Because even though the Fed is doing its best to decrease demand by increasing interest rates, there is still such low supply out there that it keeps home prices high and stable, which is what we've been talking about for a long time.
I guess my biggest takeaway from right now, GC, and let me know if you'd add anything to at least this section of the show. We talk a lot about data without perspective, needing the perspective to have the data. And we also, for the last year or so, we hear a lot from our community, recession's coming. What if there's a decrease in home prices? Maybe it's not the right time to buy real estate right now because of all these different things that are happening. And while we see the rest of the stock market and all these other things taking different kinds of tumbles, it feels like housing, as we see it, you need to look deeper inside of whatever these absolute numbers that the average kind of like media source puts in front of you, or the average kind of headline that you read, because housing has so many different twists and turns and levers that make it more resilient than you think. So diving deeper into the data and getting the perspective of, okay, there's a housing shortage. Before that, sales were going down. And within sales going down, it actually doesn't make the price go down. It actually exaggerates the shortage to a certain extent. And because of the different dynamics of builders versus existing homes and people in mortgages that want to keep these mortgages versus move and like cash out in this buyer's market, it just continues to add to this high floor of home prices, rent prices, and all the different things that we preach that have to do with risk mitigation in this asset class.
Absolutely. What more can you throw at this asset class and still it proves to be resilient?
Yeah.
We had the pandemic. We had moratorium on foreclosures for a while. And everybody said at first, because there was a pandemic and, housing was going to collapse. And then there was this eviction and foreclosure moratorium, and everybody said, well, the rental market is going to collapse. How can you collect rent when the threat of eviction is not there? That, of course, did not happen. We collected over 98% of rents all through COVID, right? And many others did very well in our space as well. They said that there was a foreclosure moratorium and that people, because we were going through the pandemic, were not going to pay their mortgages because there was a foreclosure epidemic, or because there was a foreclosure moratorium, and that there would be this wave of foreclosures afterwards, and then there'd be a crash. Have you heard anything about that recently?
No.
All that noise for nothing,
Yeah.
right? Never happened, right? For the last 6 months, people have just been saying, wow, home sales have gone down. This must mean a crash. This is a great time for us now because finally the media is coming around and realizing that there is a shortage.
Yeah.
And that I'm finally reading articles right now that are saying there is no crash that's happening.
Yeah.
Finally, it's coming around. But at the core of this, the reason you're investing in this rather than some paper asset or in Bitcoin or something crazy is because of the utility it provides. The reason that this is so consistent is because the utility that it provides, and people understand the utility it provides as well. It's a roof over your head.
Yeah.
I feel like this is a moment now where like this negativity of crash, it's starting to be in the rearview mirror, right? Year over year, home prices are actually up in many parts of the country, and all the articles are saying, I didn't expect that. Everybody else who's not a part of this Not Your Average Investor community might be saying that. We talked about that. So I finally feel like this data with perspective wins again, and other people are finally starting to see it. And it just comes from doing this for 17 years and having your own money on the line for 17 years and managing 5,600 homes
Yeah.
for other investors here. Like that is why we are able to give you this data with perspective, because of the responsibility we have.